That's not far away. FOMC, that's 29th is tomorrow. Got Apple tonight, right? Enough. Well, I guess that's a good thing. All right. Good morning. Good morning, YouTube. So markets had some gains and they're going away on GDP news. And there you go. Pretty much markets have just been choppy this week. They go up, they come down, they go up, they come down. Still in a downtrend. We talked about our internals getting to a bullish level, and here they are. So maybe get a little, maybe I'll get my wish of getting this 1.2 tagged under there and just coming a little lower. And with that guidance and markets at an area of support, it doesn't mean they can't go lower, but the majority of the downside for the moment should be over. That doesn't say how much it can rise from there, but just this correction and measured kind of move, and maybe it, the S&Ps go down to this level. I mean, we'll see. But we haven't gotten any type of a wide range bar. Like what we would want to see is something like this. So if maybe we would get a gap down tomorrow that would result in a wide range bar, that would be excellent for put credit spreads. Could be obviously the start of accumulating some longs with larger stops. There's a big wiggling. And I mentioned in the green room before he just came on here, so I had this on a monthly chart, which is on the Qs, but meanwhile, this is just flip-flopping back and forth month to month on the S&Ps. And if it closes this way, what I would expect to happen, since this is so bearish, I mean, could we get a green bar back up? Maybe, but I kind of doubt it just because of this whole inflation thing and interest rates going up to get an RBI. But whatever type of stabilization that we get, and stabilization that we would get, it would probably, and any kind of a rally, it probably would stay in the lower half of this red bar here. But as we look at the Qs, I mean, that's pretty darn big. I mean, it's kind of gigantic. I don't know, percentage wise, but just scrolling back the last few years, that's very, very large. We've got a couple of more days, well, today and a couple of more days to the end of the month, but pretty bearish, big bar. Two bottoming tail bars that didn't follow through to the upside. And that's bearish, right, on a monthly time frame, which has bigger implications. So even though we have these internals down to a point that is supporting a bias that some type of counter trend rally should be behind the corner, what's happening, what we see here on a higher time frame, advantage of it in the short term, but don't have expectations of some monster rally like we've seen in prior years. That's would appear to be over for now, and we'll see how this year progresses. But to have two large bottoming tail bars that did nothing to the upside. And now we've got this. Exactly, Paul McGraw. I can't call you Paul. Get that to McGraw, please. And fade the bounce, right? So we could take advantage of alongs and of course credit spreads. But yeah, it's not going back up to the highs. But in the short term, it could be a nice little rally. So we'll see. I think 300 and more is very possible with a bar of this size. So maybe it comes all the way down here to 270-ish if I start thinking about measured moves, just looking at this part of it down to here. But of course we'll see how this all plays out over time. As we sit here right now, maybe Apple comes out with something great, and that alleviates the bearish situation for the moment, and we get some kind of a turn, which the internals are supportive, but we don't have a turn yet. And as we see, what was strength, it had just evaporated now. And so overall, day to day so far today is really no big deal. Yesterday was a stabilization day after a wide range bar, and this all might just be some type of consolidation that gets some type of counter trend rally. For now, the hourly is still in a downtrend. And getting above this pivot high is not unusual in a move that goes down sharply like this, to get a higher low, higher high, and then roll over. So it's a kind of touch and go. I mean, that's really what it is. And what it has been this week is just been a kind of a touch and go. Don't get too aggressive one way or another. The credit spreads, premiums, as mentioned yesterday, have really gotten back to really high premiums on the downside. And just based on our internals and the analysis that we talk about on a day-to-day basis, is just provided high probability scenarios for zero DTE credit spreads. Right? And so looking forward to later in the month, where Thursdays, those will be available as well. And so we'll look to tomorrow and we'll see what today brings. All right. Good morning there, somewhere in the Rockies on YouTube. Good name. Do you still have a 7-day trial to the green room? Sure, absolutely. Just go to the website and just go to the green room. I can give you the post and just scroll down and you'll see the thing for the trial. All right. So, all right. So VIX forecast 2% move, realize should be less. All right. So that's interesting, Paul McGraw. VIX forecast 2% daily move. Up or down? Up or down. So if we look at the volatility index and say, okay, a 2% move, where does that put it, up or down? Based on, our internals, like they're down here because the markets were up, but it would be fantastic if we could get one last move to the downside. Maybe Apple comes out and disappoints, and we get this sell-off, and we get closer to, everybody knows what, the Fed thing is coming, and maybe they're going to do 3/4 of a point, and it's just, a nasty, nasty situation, but sets up a fantastic low. And the VIX pops up into here, and, internals. And so, we'll just have to see. Is it a calendar days or trading days? Calendar days. So, I mean, being asked about the trial. So it's 5 full days in the room. So if you sign up and it's a weekend or whatever, it's not going to matter. Okay. YM, I think this is set up the way it's getting rejected here. I mean, if I was looking at this at the end of the day, it looked like this with a second rejection and topping tail bar, I would recommend shorting under the low, looking for it to come down here. But we'll see. You know, clearly big bars going to the downside there. And, you know, just coming down here would be ideal. I'm still on monthly over here. Let's go to weekly. And look at that. You know, that is it's not exactly what I've shown in the past as a money bar type of scenario, but that is a bearish money bar type of situation. Whereas that was a big green bar on the weekly, and it turned into a topping tail bar that took out the highs and now below the lows. They just rarely fail. And so I would suspect this is going down here and maybe taking the low out, which is not lined up with this. Right? This only tells us that we're close to a low. It doesn't tell us to press the button. We don't trade these lines. Right? They just tell us historically that traders have gotten too bearish and breadth has gotten too bearish, but it can become more bearish. And in a bear market, and the reason that these bands, which a year or so ago were sloped up, that the market was so bullish, that now they're sloped down. And while this is a static level in a bear market, this lower band will be around 1.4. And that could be where this is headed. So while we have used these bands and they have not gotten down, and the line has not gone down to 1.2 in prior years, recent years, obviously this is changing. So sentiment is changing to a more bearish alignment with the markets, which makes sense. And our levels have to adjust. And that's what's happening now. So while, you know, if we went back and we looked at the last few years and to say, hey, if this was down through the lower band, probably we're going to get a turn day within the next day or two at the most. And because that's what's happened. But in a bearish market environment, it might, you know, go back and look at the prior history where, like I said, this has come down under 1.2 down to 1.4 or lower. And that might be where we're headed into next week, where the VIX does pop up, the Dow does go below the lows, and we do see this as the new norm as far as sentiment. And this goes down to minus 300 and sets up a nice little counter trend rally. I'm getting slightly different gap sentiment. Cruise seem stronger chart because it's taken out a red hammer. Reading Peter's question here. You're looking at the NASDAQ composite versus the Qs. Well, the NASDAQ composite is a much broader sector, whereas the NASDAQ 100 is more focused on tech, which is getting killed. And so if you were to look at, Peter, if you were to then look at QQQE, which equalizes them, right? All the stocks in the NASDAQ 100 doesn't weight the FANGs. You'll maybe even see a clearer picture or insight as to what's going on there. I can just show you quickly. So if you look at this, and it's broken the March lows already, and I haven't looked at QQQE, as you can see now, it's above the March low. So this equal weights the stocks in the NASDAQ 100. And so if I remember, COMPQ maybe is the symbol. It's like that. No. Maybe it's a dollar sign. I don't look at it that much. COMPQ. There you go. Well, that's below the low, but um, yeah, I don't, so I don't know exactly what you're looking at between the two of them, but either way, this is bearish. The momentum slowed yesterday, and you know, we just play it out. We see how it happens day to day. This is bearish. It's a greater than 100% retracement. Our internals are at a level where, like I said, we're closer to some kind of stabilization. Yesterday was stabilization. The open and closes are the same there. And, today, kind of losing the gain it had, 322. Right. So it's still up a bit, right? It's still up there, but not as high as it was. And we'll see how it plays out. And there's still going to be this hesitancy about, Apple earnings and Fed coming and all of that stuff. So, and then, you know what? The whole saying, sell in May and go away, may actually reverse this year because things have been going down into May. And the news that's come out where May is actually a good month. And, maybe the summer rally will be a summer rout. I don't know. We'll see. We see what is. The future obviously becomes a little more foggy as we go out. But look, the way things are lined up now, it's like, let's get the news out of the way, the earnings, the Fed. Things are a little cooked to the downside. Let's take advantage of what rally is available, and then odds are it's going lower because, what is there to be so bullish about? Awesome, Jerry. If you're reading the mind of the markets, I mean, both books are good. The first book is more theoretical and psychological stuff. The technicals are outdated, especially the market maker, all that stuff. But it's still, the beginning of the book is pretty good. The second book is totally focused on McGraw. If you didn't read this book, you've been here. I'll get you a link. You can find them on YouTube. Come on. My books. Down at the bottom of the website. You start reading this one, and well, it won't be. You've been around a long time, McGraw. You get a lot out of it. And I remember when email said you like to read stuff. You don't like the videos so much. All right. So how can I access the new book? Well, there's the link, Jerry. You buy it. You go to Amazon and buy it. Yeah. All right. So let's keep going here. Still bearish at the bottom of the bar, and just bearish. It can't get going. And maybe a nasty gap down really is what it will take to flush this out. Bitcoin, there's nothing much happening there. Oil, nothing much happening there. Silver is just, wow. I guess a lot of longs just giving it up. That's kind of how it looks. And it probably just needs to come down here. Just look at the weekly. Why would anybody want to buy it before it gets down there? Gold. And while the short side seems more obvious to have been the place to be, intraday not so easy, as things whip around a lot, but many things moving down, day to day, still bearish. So I think that's bonds. What are they doing? There's interest rates. It's So one of the things that I talked about in the weekend letter was the possibility of this flush happening in the markets where interest rates would spike up to here, which would really rattle the markets. And of course, the VIX going up and the internals getting overcooked, and all of that setting up the anticipated some type of rally here, which just isn't playing out as of yet. So we'll see what today brings, and of course tomorrow the earnings and the Fed and so on and so forth. But that's it. Well, yours, Dan.
Good morning. I didn't hear you talk about, maybe you did, but did you talk about levels? Because remember, we got 0 DTE now every day on ES mini.
No. I didn't talk. SPX is tomorrow. They don't do it today yet.
Right, but they're the same, so it doesn't matter. It's just a different instrument.
I haven't started looking at ES and options yet. Honestly, once I see that SPX is available 4 days now, and it's going to be 5 days in May, I don't really care much about ES.
Yeah. Well, all right. So anyway, yeah. I mean, with the gap up in the market, I'm looking. I would favor, as long as this holds, obviously a put spread under yesterday's low. We got a ton of earnings here. Let's just go right to them. I gave a big list. I went through and trimmed down a bunch of these already, but there's still a ton here. I gave a big list, watch list here of put credit spreads. The big earnings last night, Facebook, obviously. Yeah, that's a big old gap percent wise. I mean, look at that. But that looks like a very bullish low, short-term low and a downtrend. I mean, it's down so much. I'm fine with short and put spreads on that. Just going to depend on how far away and how much juice we can get. Qualcomm was last night. There's a put spread idea. So I'm going to put that in a window. This little C tick is not an earnings thing, but it was on our list from yesterday. That looks good. CTIC, just as it's a bio though. Oh shoot, did it just pop? As I'm sitting here, look at that. Hey, Greg, what do you think the odds of McGraw causing that little pop are?
I don't know. We'd have to see how much volume it trades in.
Yeah. This Hey W, I couldn't see the print, but I posted it as a short anyway under yesterday's low. Because look at that thing. Look at that big old descending triangle. Now I see one print up at 16 or whatever. So I'm going to set an alert at 1560. But that's a descending triangle breakdown. Look at that. Lower highs, horizontal, closing breakdown, weekly price void. I mean, that's a beautiful breakdown. Pick up in volume. That was yesterday's MT Live. Nicker, I don't see any gap. Upwork. Now this one's a put spread idea. Downtrend, but higher low here with this bullish gap now. I have that on the bottom right here. Papa India, not much volume, but that could be, that's a put spread watch. NOW, it's in a downtrend, 508. It's gapping too much now. Pins, it's holding well at 2040. That's a put spread idea, 30-minute high. Valet was up, and then look, that just got smacked pre-market. So we'll come back to you. Forward, I don't see any prints. No prints. T-Doc. Now, this one's a nasty gap. It's damaged all time frames. But this used to be a Corona stay-at-home favorite. Is this all-time lows? No. All right, so that's a nasty gap. I'm just gonna watch it and see where the buyers want to step in. There's actually a number of nasty gaps here today, but more so on the bullish side. But look at Algin. Wait, Algin, it shows it. Oh, there you go. So, I mean, this one also, it's down so much, down from whatever, 435. I'm just gonna watch it and see where the bulls want to step up. Elgin. Berman gapping up. That's a nice put spread idea. Nice turn here. Look at all these converging MAs. So that's a ton of beautiful support. Put that in the window. Merck was up a little more. But it's 30-minute high put spread. Amgen, it's actually a call spread idea, but the gap's too big. And that's a big gap. Look at that thing. Gapping way down the here, 235, whatever. That's huge. RJF, I see one print, 103. All right, there's a put spread idea. I didn't see it's not liquid, so I can't trust it. But if it is gapping in 103, put spread idea. MAA, still no gap, but I don't know. We'll come back to it. It could be a put spread idea if it can get over 206 here. No gap. Lending Club, gap breakout. That's put spread idea. Aflac, no gap. PayPal, it's in a downtrend. It's not quality, but maybe we can do a 1 DTE. But on that pattern, I would not go out 8 days. HP, I see one print up here over yesterday's high, 30-minute high, put spread. NBR, deep retracement, but it's a buy setup at the 50. Light volume, but that's worth watching. I'm going to just set an alarm here at 163. EQT, same buy setup 20. Hey, hub alarm from yesterday, an ILPT tick 1300. Remember this hub I was kind of watching as a pseudo 1, 2, 3. Look at this bullish 15-minute chart. So hub's going on the watch list. Yeah, Steven, I mean, just there's going to be a ton of gap up. So, you know, you got to help us find the best quality ones. All right, ILPT. All right, this is what we call, yeah, I had an alarm at 18, and this is what I call a bull gap surprise. It's now coming in. I'm going to set a new alarm at 18:05 so I don't have to watch it. All right, we still had a couple shorts here that I have alarms going off. eBay is stopping out, it's break even. Or maybe I had an alarm set early. I had a Dropbox alarm here go off. Dropbox, all right, has not hit the stop. Oh, it did, 22.22. All right, yeah, it was over yesterday's high. Uh, I would give it a 5-minute high on Dropbox. eBay 50, yeah, eBay, I did move break even. So eBay's out break even, 52.70. Dropbox, move stop, 5-minute high. All right, because, yeah, the spiders and diamonds have turned red, which means under the open. Qs and IWM still above the open, but they're hesitating here too.